Bloomberg Audio Studios.
Podcasts, radio, news.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, China's chip sector sees a $13 billion rally. We discuss the bets on Beijing stimulus.
And Amazon's leaders push for a return to offices to protect the tech giant's culture.
And a U.S. infrastructure hack. American waterworks, the latest target as officials warn of threats from Iran and China. But first, we turn to our top story on the markets, which is this Chinese chip maker, Semiconductor Manufacturing International, SMIC, leading that $13 billion sector rally after global investors bet that Beijing will declare more policy or financial support for the industry that is central to its geopolitical ambitions. Bloomberg's Emily Grafeo joins us for more. Look, SMIC is blacklisted for U.S. investors, but this is a broad rally in the chip sector over in China.
This is. It's not just SMIC that's rallying, but that stock is up over 28% just on the day, up about 65% in the last few days. And these are shares that have been trading in Hong Kong because the stock market actually in the mainland China has been closed all week for the holiday. So there's a lot of anticipation that when the Chinese stock market opens, I guess tonight for us in the U.S., but tomorrow morning, Tuesday morning in China, that there's going to be a flurry of bets. So we're seeing now traders kind of getting ahead of that. Smaller competitors in the chip space are also up as well. Huang Semiconductor up something like 17% right now.
Investors think that the Chinese government is going to have some kind of semiconductor industry specific stimulus, right? But if you look at the Chinese equity market, since kind of late September, things have been improving. Mm-hmm. Give us the bigger picture of this performance relative to, I guess, US tech or European tech so far in 24.
Well, I mean, the bigger picture performance is that Chinese stocks overall have pretty much been in a bear market since about February of 2021. So although we've seen big gains since late September when, like you said, Beijing did announce fiscal and monetary stimulus, we're still down for the year in a lot of these areas. And that's right. It's really a big question here. What exactly are we going to get from China when they do have that press conference later tonight, tomorrow morning in China, and when the stock market reopens? There was a note from analyst Brent Donnelly, and the subject line of his email was China, 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 China. And then
he has a point.
Yeah, he has a point. And his note, he said, how big is the stimulus? Will they even tell us? Tonight's China reopening is likely to be spicy. So there's a lot of questions about, is the government actually going to pledge specifically to add stimulus to the semiconductor sector? But the bet here in the market right now is that they will.
And also, look, this has been a long-hated area more broadly. Positioning has not been long China and indeed China tech more broadly.
Because people have gotten burned by it in the last 2 years. Anyone who's gotten in, like I said, back in 2021 is actually still in negative territory. We are seeing sentiment start to, I guess, come around as one would expect. The stock market goes up, ETF flows follow. So in just the last week, we saw about $6 billion flowing into U.S.-listed China ETFs. So even, across the globe, investors are trying to get in, or at least play the momentum right now.
Bloomberg's Emily Grafeo with the reporting on the market moves on China tech. Let's discuss a bit more with Janet Mui, head of market analysis at RBC Brewin Dolphin. And your reaction, Janet, was to upgrade your call in the equities context on Asia ex-Japan. When you're weighing up the factors in the context of China tech, what were the things that you were looking at, short, medium, and long term?
Thanks for having me. I think we have been skeptical on China, as many people are, but I think is really how undervalued China has been versus, say, the US or other developed markets. And also the fact is positioning has been very light. I mean, for us, we have been underweight for quite a sustained period of time. So I think that that is shifting, and I think Chinese market is very momentum driven and very liquidity driven. So we have seen both happening, and I think we would like to participate in this rally. This probably has more to go. And in terms of Chinese tech, I mean, obviously undervalued, very unloved versus the U.S. counterparts. Obviously, they're different, but still, we think that there is still much upside potential from here. But having said that, we just upgraded modestly. I think there's still a lot of question mark for the longer term.
Emily's reporting just in that conversation was largely about some of the domestic chip names in China. What's your attitude towards the semiconductor sector in mainland China?
Yes, I think it is obviously a very state-supported sector, has been for a while, long-term wise. So I think it makes sense for investors to favor this sector, given basically, I think the new tech, the semiconductor strategic areas of, those equities have, it should do well, given how important that is. But ultimately, we have to understand that a lot of developed economies are likely to still being skeptical and have restrictions of all sorts on those companies' products. So I would say I would participate in the rally. I do think that it has further to go, but I would be a bit more cautious over longer term. And we have to kind of understand where to take profits when it is necessary.
To that point, Janet, do you think that people are protecting to the downside enough? Do we think a lot of people are going to get burned once again?
I mean, it is potentially possible. We have seen that play out before in the previous bull market cycle, and then a very sharp bear market in China. We have seen that play out again and again. But I think it could last for quite a bit, as I said, given how light the positioning, how underweight it is for global investors. So I would say it could have further to run in the next a couple of months at least, I think. Right. I think the Chinese authorities, their hands are tied. They would just have to provide more stimulus. But you're right, there is absolutely a chance for some investors to get burned. So that's why we have to monitor it very closely.
What's been interesting is there's been institutional money flowing in, David Tepper saying how much he's liking China, and also retail. I want to get your check just more broadly on sentiment towards semiconductors globally, technology globally. Where are we seeing the optimism? Still in institutional money, or is it now sort of retail and we question, therefore, the longevity?
I think both. I think for us, for example, we still like the global semiconductor sector. Obviously, that's mostly U.S. play. So I think there's a lot of structural supportive drivers behind that. We are very happy to get exposure to those high quality companies. So I think for institutions, I think it will be very dangerous if you don't participate in the semiconductor, that AI related theme. I think for retail investors is, I think once the momentum is back, I think that would draw in more participation, particularly as interest rates are being cut, the economy continues to expand, and hopefully less bad news out there on the headlines. I think that could help. Overall, we still like the sector pretty much. We have stayed invested, and we continue to encourage investors to add in more money when valuations have turned attractive, say, the past couple of months.
Janet, when you got to your desk this morning in London, how big a factor or risk was trade risk or supply chain risk for technology investors around the world?
Obviously, it is part of the consideration, given that the chip industry is very, the supply chain is very complicated, and if there's widespread trade protectionism, then obviously that's not great. But fundamentally, the demand is still very strong. And I think what we are a bit more reassured now is that if you look at the polls and the probability of Trump winning the election by betting market, it has gone down. Obviously, it's a very tight race, but it gives us a bit of comfort to be a bit more positive on the China equities story and also the global semiconductor play. But I think ultimately, fundamentally, is about the demand, the long-term build-up of AI infrastructure, and how strategically important that sector is for many sovereigns out there.
Janet, how important, therefore, when you sat down was the 4% number on the 10-year yield in that macro context for these AI bets?
Well, the thing is, we saw yields go back to 4%. I think some small to mid cap stocks could be struggling a little bit today, but we still see some of the key semiconductor stocks rising. Obviously, it's very company specific, but what we think is, I think. Yeah, strong economy, good job market ultimately is good for the world economy, for the US, for corporate earnings, etc. I wouldn't look too much into this one-day move for equities. If they're down or struggling a little bit, I would still be quite comfortable to be overweight in the US and in the US semiconductor space.
Janet Mui, love having you on, Head of Market Analysis at RBC Brewin Dolphin. Thank you. Now, coming up, US water infrastructure is under attack. More on the latest cyber attack on American waterworks. This is Bloomberg Technology. American Waterworks says its computer networks and systems were hacked. Now, the New Jersey-based company, which supplies drinking water and wastewater services to 14 million people, said that parts of its systems were disconnected or deactivated as they worked to contain the cyber attack. For more, Bloomberg's Jordan Robertson joins us now. We've had warnings from governments about this. How broad is this attack from your perspective, Jordan?
Yeah, hi, thanks for having me. So this company that was breached is the biggest publicly traded water and wastewater company in the U.S. As you mentioned, it serves some 14 million customers across half of the states in the U.S. It's potentially a very big deal. Unfortunately, we don't have a lot of details or specifics about this particular attack. We just know what the company has disclosed this morning in a regulatory filing, which is that it's a victim of a cyber attack and that it's disconnected or deactivated some of its systems. We don't have a lot of specifics about the actual attack, but we do have a lot of context around attacks against water treatment and water facilities in general, which is that the U.S. government has been advising for months, in particular, that Chinese groups have been infiltrating U.S. water systems in possible kind of preparation for more disruptive attacks. Now, we don't know if this is one of those or if this is some other type of breach, but given the context and given the size of this water company, it's potentially a very big deal.
Can you give us the context as well as the US accusing China-linked hackers of infiltrating networks that operate as well critical US services? We've got reports in the Wall Street Journal on Friday about potentially an attack on, providers of internet, of wireless, but also of US broadband more broadly.
Yeah, what's happening now is a little bit different than what's happened in previous years with regard to Chinese hacking. For many, many years, the U.S. government has issued warnings about Chinese hacking for economic espionage, so industrial espionage purposes, and also just regular espionage, spying on government agencies and military contractors and things like that. But what the government has been warning a while, about now, is that they're accusing Chinese hackers, particularly a group called Volt Typhoon, which is the name that cybersecurity professionals have given them, of kind of pre-positioning themselves inside critical networks to conduct potentially disruptive attacks at some predetermined point in the future. In the military, they call this kind of preparing the battle space. That's a very different type of attack than we've seen in the past from some of these Chinese groups. So that's what the U.S. government has been warning about. Again, in this case, we don't know yet if this is related to these Chinese attacks at all, or if it's something else, potentially like ransomware. But given that context, and given that the U.S. government is really ringing the bell and really raising the alarm about these Chinese attacks, it bears paying pretty close attention to this incident to see if there's something deeper involved.
Jordan, you're deep on the cybersecurity beat, right? And there's going to be a section of our Bloomberg Technology audience around the world that go, they're attacking water infrastructure. So speak a little bit more about that. Why water infrastructure? And do we have any reporting on sort of the competence of US companies and the US government to defend against it?
Yeah, to answer your first question, why attack water companies? We saw with the attack on Colonial Pipeline several years ago that, you don't have to attack an actual pipeline to disrupt to disrupt critical systems, whether in the U.S. or elsewhere, you only have to disrupt their IT systems. In the case of Colonial Pipeline, which disrupted gasoline shipments across the entire eastern U.S., it was their IT system, it was their billing system that went down as a result of ransomware attacks. So there's a lot of damage and a lot of disruption that hackers can do by simply disrupting even just the IT systems of some of these critical infrastructure providers, whether that's electricity providers, whether it's water providers, whether it's gasoline shipment companies and pipeline operators. So there's potentially a very great advantage that a foreign nation could have, if they decided to disrupt in that way. And with regard to the competence of critical infrastructure providers, we've done a lot of reporting. The cyber team at Bloomberg's done a lot of reporting on this topic. And the answer to your question is it varies. The largest companies, the largest electricity suppliers in particular, tend to be pretty good at cybersecurity. They've gotten the message, they've got big budgets. But as you go down that ladder and you go down the ladder of resources in particular, it really just varies. There are some very large critical infrastructure providers that are just not as great at protection as others.
Bloomberg's Jordan Robertson, we're grateful for that reporting. Thank you. Meanwhile, Ukrainian hackers say they carried out a cyber attack that took down online broadcasts of Russian state TV and radio channels. According to officials in Kyiv, at least 20 Russian broadcasters were affected, though claims could not be verified by Bloomberg News. The disruption to the broadcast coincided with Russian President Vladimir Putin's 72nd birthday. Caroline.
Back in the US, Ed, state, local officials across the country are bracing for a range of possible disruptions, including cyber attacks, as well as disinformation, unruly crowds even, ahead of the US elections next month. We want to dig into that with Bloomberg's Jamie Tarabay joining us. You went to Arizona. You are focusing on really the computer systems in particular around voting in Arizona. Why? Remind us.
Well, Arizona 4 years ago was the scene of one of the biggest flashpoints in the 2020 election. There is an aspect to what they did at the time that they really learned from going forward. And one of the first things that they did was look at physical security as well as cyber security. A fence went up to protect the workers inside. And then they began this system of trying to reach for utmost transparency. There's a 24-hour live stream camera that actually doesn't even have to work outside of election season, and that is going 365 days a year, 24 hours a day, 7 days a week. They are inviting people to come to tour, to look at all of the computer systems, to see that everything is serialized, everything is audited, everything is tracked. All the networks are air-gapped, so they're not actually connected to the internet. Whatever ways people might think that there's a possibility that an election or that their vote could be hacked, the people in Arizona are doing their utmost to really push back and try to dispute a lot of those conspiracy theories.
Jamie, 4 years ago, I was there, posted on the election trail in Maricopa County. And I think it's worth just discussing the basics of what we're talking about. It's a building. It has windows and bricks and mortar, and they're making modifications to it because inside that building, they'll count votes, take it from there and run with the rest of the story.
To go into this building now, and as you said, 4 years ago, the conspiracy theorist Alex Jones made it into the building a couple of days later. One of the people who was a protester in the January 6th attack on the Capitol was in the parking lot. Heavily armed people were in the parking lot, and now you cannot get in there without access, without a security clearance. The room where all the ballots are tabulated is a place where you can only go in if you have security clearance. Every single machine is audited and tracked and checked. They have literally done everything they can to get ahead of any possible question about any irregularities or any redundancies. I mean, there's a machine that sifts through the ballots, and if one of those ballots weighs just a little bit different to the rest, they basically will get rid of they'll cancel out the batch, like 200 before and 200 after. They're really doing everything they can here.
Bloomberg's Jamie Tarabay, terrific reporting. Thank you very much.
This is a first look inside the world's first humanoid robot assembly plant. It's a work in progress. Here, Agility Robotics is going to manufacture Digit, a teal and metal gray bot that walks like a bird, its knees bend backwards, and is designed to work, at first anyway, at warehouses, including at Amazon and GXO Logistics. The factory is on marshy former agricultural land on the outskirts of Salem, Oregon's capital, not a robotics hotspot. But it is up the road from Corvallis and Oregon State University, where Jonathan Hurst, a robotics professor, co-founded Agility, and of course there is an Amazon warehouse nearby. Agility's first design was a monopod called Thumper. Later and more sophisticated bots have arms and a head unit for sensors, making them a little less creepy. At this facility, Agility simulates work its bots are already doing for clients, stacking tote bins at Amazon and placing bins on conveyor belts in the case of GXO. While I was watching, one Digit tried to place a stack of bins on top of another but was off by a small margin, so the new bins sat askew. Digit paused and watched for a few seconds as its software tried to figure out what to do, and it gave up. Other times it was seamless. Digit's communication systems and 4 sensors live in its head unit. At first, Agility didn't put heads on the robots. The team started with the goal of building bots able to move in human spaces, not ones that looked like us. Digit doesn't have fingers. Agility's first Digit model started with flat paddles capable of lifting totes, and they're adding other end-of-arm devices. The company hopes this building will be able to churn out 10,000 robots a year, but getting there will take a while. Engineers are still documenting assembly processes, figuring out what tools should go where, before they can start mass hiring technicians to assemble the bots. The first robot assembled here, one of Digit's new 4th version, will be completed sometime this month.
Talking of Amazon, a rare analyst downgrade, citing concerns over the company's margin trends into next year, saying growth in the cloud computing business is unlikely to help much. Wells Fargo Securities cut the stock to equal weight from overweight and cut the price target from $225 to $183, one of the lowest on Wall Street. Ed will have more on that later.
Yeah, Amazon, which recently decided to bring corporate employees back to the office full-time. On ringing Bloomberg, Spencer Soper, sources are telling us that there's a reason for that, and the reason is culture. Explain that.
Yes, so Jassy is saying, CEO Andy Jassy is saying that new hires, and remember, Amazon doubled in size through the pandemic, that newly hired Amazon employees just aren't getting the chance to learn and understand the culture the way they would if they were working in the office, all week long. They're currently at 3 days a week. There's a lot of what they call coffee badging going on, people badging in, grabbing a coffee, heading home, doing the rest of the day from home. So 3 days isn't quite enough to have that overlap of people where the younger employees are getting an opportunity to learn.
30 seconds, I'm afraid, Spencer, but this is something Andy Jassy is very passionate about.
Well, that's what he's saying. He wrote a very long note to employees explaining it. And then the pushback he mentioned the word culture multiple times. And then the pushback is, oh, well, you're just trying to lay more people off, and this is a way to further thin the ranks. And the true answer is it's probably a little bit of both. They want to help the culture and they want to thin the herd a little bit.
It's always somewhere in the middle. Spencer Soper of Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. Going to take a quick look at markets. It's hard to summarize what's going on beyond strong jobs data on Friday for the months of September, kind of paring back the increments that we expect the Federal Reserve to cut rates. The NASDAQ 100 modestly lower, basically flat. The Philadelphia Semiconductor Index is flat. There is some names, single names moving to the upside, some the downside. Bitcoin pushing above $63,000 per token. There's lots of analyst noise out there. Apple was downgraded by Jefferies over iPhone sales pessimism. The analyst says high expectations for the iPhone 16 and iPhone 17 are premature. An analyst note, Caro, on an iPhone 17 that doesn't even exist yet.
One that we're going to be digging in with another analyst in a moment. But let's just talk about what does and doesn't exist. Bloomberg's Apple whisperer, Mark Kerman, is with us. And you've been writing over the weekend, power on as always, about the cadence with which Apple gives us products and ultimately about a timing mismatch, perhaps with what actually is eventually on the market.
I think it's interesting because my point over the weekend in my Power On column, I think, is very much connected to what analysts are now seeing, right? I think some of these analysts are a little late to the game here. The issue is not necessarily the iPhone 16, Apple and AI, or the iPhone 17 in a vacuum. I think this is a company that is slowly pushing away from the momentum and the innovation it had so many years under Steve Jobs and so many years under Tim Cook and Johnny Ive after jobs, but now it feels like we're at a point where maybe, at least for the next couple of years, they're running out of these big ideas. They're behind in AI, they're behind in mixed reality, right? They've been behind in the smart home, but they do have these core competencies that continue to keep the business humming. The iPhone, the iPad, the Mac, the Apple Watch. And I think that looking at the phone just as the issue is a little bit too narrow. This is a company that's been searching for a next big idea and a next big product category. And there's really two sides of the coin here. One, are they going to find that? And two, does that thing exist? Is there really another iPhone? At this point, I'm thinking the iPhone is not really something that you're able to replicate, right? That was a once in a generation. And I'm not talking about a 10, 20-year generation. I'm talking about a 50-year generation product.
Right.
And so maybe expectations for some are too high.
Unless it's a different form factor from a smartphone, which we'll get into later in the show. The umbrella point of your newsletter is that Apple has been releasing a new generation of product annually, and it's moved away from that. But there were advantages to doing it annually. The team knows what's coming, investors know what's coming, and there's like a holiday PR marketing campaign that can go on, right? What is the advantage of not doing it annually? Yeah, go ahead.
Well, it's slowly inching away from that, right? And I think there's two reasons. One, there's so many products now in their pipeline. There's so much stuff. And the way that they're functionally organized as an engineering organization makes it so every team has to touch basically every new product before it's released. There's no iPad division or Apple Watch division, right? This is a very cross-functionally designed organization. That's the way Steve Jobs set it up. That's why they've been so successful, right? That leads to product delays. That leads to software delays. Now they know that's what's happening. And so they have to roll these features out over several months. They can't just do it at one time. And so Apple Intelligence, that's rolling out between September and June, right? It's not all coming out in September. It didn't all come out last month. It's not all going to come out on October 28th when I expect Apple Intelligence to be released. You saw with the Apple Watch Ultra 2, right? They retained that model for 2 years in a row, simply add some new bands and a black color option this year. The Apple Watch SE wasn't updated. The iPhone SE is updated every 2 to 3 years. You're seeing the iPad Pro now updated every 1.5 to 2 years. So they're slowly inching away from that annual cycle, which is something they just simply couldn't keep up anymore. The good news is you're getting more polished products, you're getting bigger upgrades generation over generation potentially, and you're getting fewer bugs and more unpredictability from Apple. So I think overall it's a mixed bag, but I lean towards these bigger generational updates being a good thing. The one product that I don't think is going to be necessarily impacted by this is the iPhone. They're so locked into that 12-month cycle on iPhone hardware, you really can't back your way out of it. It's too important to the company and the stock price, its marketing, and the holiday season. So it's really the peripherals around their main breadwinner.
Bloomberg's Mark Gurman, and I would say it is a must-read power on from the weekend. Thank you very much. Thanks. Let's get more and let's talk deeply on Apple. Mizuho analyst Jordan Klein is with us, and there's a lot of noise this morning from the sell side, Jordan, about is iPhone 16 overhyped. The Jefferies note even mentioned 17, which is fictional at this point. It doesn't exist, at least as far as we know. When you sit down at your desk and you get the phone calls from clients, how do you react to all of that?
Well, I mean, this is a rite of passage for Apple and the investment community every September, October when they launch a new phone. Everyone loves to go out and do their checks for how long does it take, to get a phone once you place the order, and that's, the lead time analysis to kind of judge demand. I think it's kind of nonsense. I mean, yeah, people like to do those. The press and media pick it up. But at the end of the day, you won't really know how well this cycle is till next spring, and then by then everyone's looking at the next version, right? So it's always kind of on to the next thing. And I think from the standpoint of where I'm focused is no one really expects the 16 to be some game-changing iPhone cycle. It's not going to outperform, I don't think, expectations. If anything, it's expected to underperform. That's why the stock's been lagging. But most importantly is kind of the 17, the next phone, next fall, that would be the second iteration of their AI software, which hopefully is then going to drive more of a replacement cycle and get people excited.
Generally, Could you summarize what investor attitudes are toward Apple holistically right now?
They're not good. I think every day you get another sell-side report that is negative or cautious in terms of our checks suggest demand is weaker than it was a year ago. The phone isn't selling well. They're going to start cutting unit production by December. And that permeates across the investment community. And most people are like, yeah, it's a major stock. I have to pay attention. I have to have some weighting in my portfolio relative to my benchmark. But most people just take a view that unless I think this product's going to surprise, I can underweight the stock and not worry about missing any alpha. And that's what they're doing. They're going into other names, particularly the Mag 7, that, the setup looks better. So all I'm saying is that the sentiment couldn't be that much worse than it is now.
Couldn't be that much worse, but it's actually only about 4% off of its record high in terms of its share price, still worth more than $3 trillion. Is this just going to be sideways trading, therefore, Jordan? We sort of priced in some of that anxiety.
Yeah, that's a great point. And that's kind of what I was noting today, that, who would have guessed Apple's shares are up 17% this year? It's a little below the market, but it's better than a lot of other names, particularly in software. It's better than Google. It's actually better than Microsoft. So I think, again, that shows you positioning and sentiment is already down. And every time we get a new update or we get closer to the earnings report later in October, I think the surprise to the downside factor gets more and more priced in or expected. So again, yeah, it could be an underperformer and a laggard, but I don't think it's going to all of a sudden derate and trade down materially. I think there's a lot of people who might buy the stock if it ever got closer to $200.
Mizuho, Jordan Klein, getting a lot of calls. Thanks for answering ours today. Meanwhile, Hon Hai Tech Day 2024 is kicking off tomorrow, and the company plans to showcase how the group has introduced AI applications into their platforms. Bloomberg's Annabelle Drulers has more.
iPhones, the Kindle, Nintendo Switch, even Ring doorbells. Foxconn is making these and more. Assembling the devices mostly in China has allowed the company to build an enormous business, generating nearly $200 billion in revenue last year. But the market for many types of electronics, and particularly smartphones, is maturing. Foxconn wants to move up the value chain to products that generate better profits. AI servers is one area where it's making progress. Sales have risen as Foxconn works with the likes of Nvidia, Microsoft, and Amazon on artificial intelligence infrastructure. Semiconductors is another field with a focus right now mostly on older, less sophisticated chips. At present, these mostly go toward in-house needs, including EVs. This is an additional space where the Taiwanese company wants to compete. With a value proposition similar to what it once told Apple, Foxconn can build part or all of your car in less time and at lower cost.
We believe this contracted and design manufacturing service goes same way as smartphones and laptops. So we will have 40 to 45% market share in the futures.
Goldman Sachs says EV outsourcing could be worth more than $140 billion by the end of the decade. But with Foxconn still to sign on a major customer, its grandest auto ambitions are yet to be realized.
That was Bloomberg's Annabelle Drowlers on Hon Hai, the publicly traded arm of the company we all know as Foxconn. Now coming up, AR glasses maker XReal expands its retail footprint around the world. We're going to speak to its CEO, Chi Zhu. That's coming up next. This is Bloomberg Technology. The lack of a rebuttal in Ubisoft's response to recent takeover speculation by Tencent suggests the door is open to a potential buyout. However, Bloomberg Intelligence Research points to potential regulatory hurdles given the current geopolitical backdrop. Let's get out to Bloomberg's Benoit Berthelot, who's in Paris. And actually, Benoit, I think this morning we have heard from Ubisoft, who have issued a brief statement about the reporting. Just summarize what they said.
Yeah, so they basically said that the Ubisoft is used to review its strategic options. That's options plural. They didn't say more on the report and our talks for take a private report with Tencent, but they just said that they are indeed basically working on options.
And Benoit,
they also said the management was working on its current strategy.
And remind us of what the strategy might be when share price has halved, and that's obviously why perhaps it assesses options.
Yeah, they said they would focus on the open world games. That's a point that's been difficult for them recently because they released a Star Wars game that was an open world game that didn't work very well, and the next one, the big one, Assassin's Creed Shadow, has been pushed back to February. So it doesn't say much on their strategic options right now. Just we understand that the talks are underway, and today actually the company didn't really lose the gain that it saw on the markets on Friday, which says a lot, but now everyone is sort of waiting for the next step.
We keep an eye. Currently was just finishing the day a little bit lower, 3.8%. Benoit Berthelot, we thank you so much. Now, shares of Nikon surging the most in 2 months after it was disclosed that EssilorLuxottica has taken a 5.1% stake. Now, according to a filing, the eyewear maker began accumulating Nikon shares in early August. The move marks a backing of lens technology as the rise of smart wearable emerges. Now, earlier this year, Nikon said it plans to invest more than $600 million by 2030 to bolster its lenses and other offerings. Ed.
We stay in the realm of smart wearables. AR glasses maker XReal has announced it will expand its in-store retail presence, offering sales across Europe, Asia and the United States. Here with more is Chi Zhu, XReal CEO and co-founder. And what we're talking about is the Air 2 Pro and Beam, which is basically the puck that goes with it to connect whatever compute device you want into the augmented reality glasses. Let's start with the news, which is you're backing physical retail.
That's
you
right.
want people to go into a store, pick up the glasses and buy them. Why? Why that strategy?
Okay, so previously, our product is available on Amazon or some other online channels.
Right.
This is such a new kind of cool gadget. We want the people actually can go to their nearby store and try it for themselves.
I see that pin on your lapel.
Yeah.
I know where that's from, Meta Connect.
That's right.
So, I've tried the Orion Meta AR glasses. The technology difference between what Meta announced last week and what you're doing is that basically you can cast another device into your glasses. It doesn't have its own operating system.
Yep.
How much of a limitation is that for you? Where do you want to take XReal to compete with Orion, which isn't going to be sold in its current form, right?
That's right. Yep. So first of all, you have to give a lot of credit to Meta and even Snapchat, for those big tech company getting into this space. This is very important. It kind of validates the future of the entire AR market. On the other hand, what we are trying to do is, can we actually deliver some kind of product that people can use today? Not the future, not in several years ahead. So that's why the kind of product strategy we're taking is, instead of giving a fully spatial computing display that is more complicated running their own operating system, can we instead provide maybe a spatial display kind of a philosophy. So people can easily use our glasses like Air 2 Pro, also just look like a sunglasses this way, right? So they can easily plug into your cell phone, your tablet, or your even laptop, handheld gaming devices. So this instantly turned into, in my opinion, a much bigger high-resolution virtual display. And the feedback has been phenomenal. I mean, I saw people actually going from those traditional 2D flat screens to those kind of virtual displays.
What's interesting is people are buying these in numbers. 430,000, I think, was the number we showed on the screen. You've got 47% of market share. Where are they buying them? Where is the consumer for you? Is it more China-based, Asia-based, or is it in the US too?
Oh, actually, this is a global footprint. So yes, as you mentioned, we're nearly half of the entire AR global market share, and people are using that for media consumption, so they can stream like movies, and also they can play games. Connecting this to Steam Deck or Switch is a good way to go. And actually, people are even connected to laptop for productivity and some other activities.
Okay, so what then of manufacturing? Where are these being made at the moment? You are headquartered over in China, but you are a global company with a global footprint. But where exactly are these being supplied from?
So right now, this is manufactured actually in the same kind of a plant as the Apple Vision Pro. They're manufactured in China. And we want to leverage that kind of manufacturing capability and efficiency being in China, especially for this kind of a new industry at a very, very early stage.
Qi Zhu, CEO of Xreal, really great to have you here with us in San Francisco. A mixed outlook for Netflix on Wall Street. The streaming giant was downgraded to underweight from equal weight at Barclays, but upgraded to overweight from neutral at Piper Sandler. Barclays is questioning the company's valuation as Piper Sandler gets bullish on momentum from its advertising strategy. Netflix reports earnings next Thursday. Caro.
Taking it to the theatres because, boy, it was a rough start for the Joker sequel. The Warner Brother film opened at $40 million in sales, much lower than the projected $60 million. And the film cost, of course, Warner Brothers $190 million to make. Let's discuss Bloomberg's Hannah Miller with what went wrong. Why did no one rush to go and see it?
Yeah, so they really gave director Todd Phillips free rein with this movie. And it seems like it went a bit over the top. There's been a lot of negative word of mouth reviews, and critics are not liking it. So we think that cut into, people seeing it in theaters this past weekend.
The bar was high because the first Joker almost hit 100 million in its opening weekend and did eventually gross $1 billion. So there's that. If anyone watching Bloomberg Technology saw it and loved it, you know where to find us. We welcome your feedback. Is it the whole movie theater versus streaming debate, the battle for eyeballs in a busy weekend?
I think we have seen some successes in recent months. Dune 2, Beetlejuice, those were both Warner Brothers movies that did really well. There obviously is this fight to get eyeballs away from streaming and people back into theaters. And this was a huge miss. People were expecting this to live up to the expectations that Joker set in 2019.
People also have short attention spans. I think the film's more than 2 hours long, isn't it?
It is, and I think people were taken aback that this is a musical, that Lady Gaga is going to be singing, and there are songs, and it's not as gritty as maybe the first one was.
You were saying that it took everyone surprised that it was a musical at all, but there is some fierce competition. People are going and seeing other stuff. What has got people electrified?
Yeah, people are into the wild robot film. I think people are kind of looking for more positive stuff that they can enjoy, go to with their families. Yeah. So it'll be interesting to see, as we get closer to the holiday season, how movies fare in theaters.
And this comes obviously as Hollywood itself reels from strike action, a lot of that to do with what we talk about day in, day out, artificial intelligence and the like. Where did this movie get made and how, and was it synonymous to that issue?
Yeah, so with this film, there was a lot of anticipation, around it. It was filmed in New York, Los Angeles, and even New Jersey. There was a lot of excitement. People loved Joaquin Phoenix as the Joker in the first one, and I think it just kind of got out of proportion. It's very dramatic. There's a lot of courtroom drama scenes versus, the crime that we saw in Gotham in the first one. So I don't think it's appealing to people the same way.
Hannah Miller, resident critic for us, and everything about the movies. Now that does it for this edition of Bloomberg Technology, Ed.
Yeah, recap on the podcast, you know exactly where to find it. Big thanks and shout out to the team in New York City and the crew out here in San Francisco. This is Bloomberg Technology.